I didn't want to start the giving when I was in my 70s or 80s or something, because at that point I wouldn't really have much energy. And I mean, my only option at that point would be to write checks and probably wouldn't even be able to do that much due diligence. So I wanted to actually start experimenting a lot earlier. And because I had a bias towards education and specifically education in India, and I wasn't going to be moving to India, I knew that it was going to be difficult and uphill to try to get something going remotely. And I expected to fall flat on my face. I wanted to give myself enough time so that 5, 10, 15 years of failures kind of becomes like the tuition bill. And then maybe after 10 years, I would know what I'm doing. So I started, when our net worth crossed 50 million, I started with the formula that we would give away 2% of net worth every year. And that would give the organization at least $1 million a year. And I wasn't particularly concerned if the million pretty much went up in smoke for several years. I just viewed that as part of the tuition to be paid. And so I started when I was 42. Now I'm 60. So there's 18 wonderful years of experience, which has been very helpful. And of course, we didn't have even 10 years or even 10 months of no traction. We were very lucky. We got traction almost right away, probably in a few weeks. And so there really wasn't any kind of wasted money or anything like that, what I was expecting. So things went, I would say, 10x better than I expected. That's been the journey so far.
Okay, I want to get into that journey. Can I ask just a mechanical question though? I mean, it's an odd group of people. It's all fund managers sort of similar to you in terms of tax situation, LP, and most of our money's in our funds. I'm curious, what are the mechanics? Do you distribute securities? Do you use some sort of donor advised fund? Do you have a family foundation? Do you have you figured out anything like do's or don'ts in terms of okay, getting money from fund to people?
Well, I mean, I think it depends on the amount. I think if you have, definitely like a 7-figure number or something annually, then foundation would make sense. I think the economics would work out, the frictional cost would be low. So I had started with a 501c3 family foundation in the US and a charitable trust in India. So they're kind of two separate organizations. After a few years, because we had other folks who wanted to contribute to Dakshana, we got public charity status from the IRS. So Dakshana now has been for quite a while, it's been a public charity. And one of the advantages of the public charity is that when someone at Microsoft or Google or one of these places donates money, the company match can happen. These places like IBM and Google and Microsoft and so on will only do the match if it's a public charity, kind of bona fide public charity in the US, et cetera. And so that's been actually helpful because we've got quite a few donors like that who, smaller amounts, but the company match is significant and so on. Basically, that's what we did. We set up a foundation. And then, I mean, in terms of the giving, you can give the foundation appreciated stock. That's got some tax advantages. You can give it cash. That's pretty standard set of tools that you would use with other charities that you're giving money or stock to.
Okay, great. And so now kind of getting into the meat of what you've done, can you just lay out the story of Dakshana and how it started, what you guys do, some of the results, et cetera?
Yeah, I mean, I'll get into that in a second, but I just wanted to kind of talk a little bit more philosophically about this concept of what I would call feedback loops. We have feedback loops in capitalism. So for example, if you start a business, let's say you start a restaurant or something, that business at the end of the day does not make money or, has difficulty and, it's running in loss and so on. Eventually that business is going to go away. Even if you're venture backed and you raise capital and so on, at the end of the day, eventually the business has to be profitable. If it is not profitable in some way, cash flow positive and so on, it's going to go away. So basically in capitalism, we have these, what I would call feedback loops, which is that if we are not productive in providing society with some useful product or service as a business, we will not exist. Because if you're providing something useful, it will manifest itself in the form of, profits and cash flows, and that'll keep the business going and growing and so on. In philanthropy, we have a problem because there is no feedback loop. What I mean by that is, so let's say I'm the Rockefeller Foundation, and let's say I have $1 billion in my endowment or nest egg, and I'm a stupid investor. I don't have like great investing skills, and I'm generating something like 6% a year, invested in index and a few other things. And the mandate of this foundation is to spend 5% of its assets every year. The IRS kind of wants you to spend around 5% to keep your status. So the Rockefeller Foundation would spend $50 million. It would make about $60 million. And so every year, the corpus would keep increasing. Now, that 50 million, so this corpus increasing means that 50 years from now, that organization will still be around. And 100 years from now, it'll still be around if those numbers hold, the 5 and 6% and all that. Now, it doesn't matter whether the Rockefeller Foundation does anything useful or not. If they start the year with 50 million and just make a bonfire out of it and no good to society, it doesn't matter because the following year they will have another 50 million or more ready to go. And 2 years from now, they'll have another 50 plus million to go. And it will basically keep going. So in effect, unlike a business that has to provide some positive value to society, foundation with an endowment may or may not provide any useful value to society, and it would keep going forever. So the lack of a feedback loop is a real problem in charity. So that's the first. There are basically two feedback loops that are missing in the nonprofit world. The first thing that's missing is that you don't need to create a profit, right? You basically make this 5-6% by being dumb and stupid or whatever, and you will be in business forever. And the second is that you don't really need to do anything effective to help society, and you'll be around. So the second problem, which is in capitalism, the measurement of outcomes is very precise. I mean, we all look at businesses, we all decide which ones we want to invest in. We know how those businesses are doing. We have a lot of precision of what went in and what came out. And those measurements are very precise. There's no ambiguity about them. In most philanthropic ventures, even ones that have a lot of positive value to society, the measurements are really hard. In fact, I would argue that probably for like 98% of stuff that you would do in the nonprofit world, the measurements may be almost impossible. Let's say, for example, there's a big drug problem in the city of San Francisco amongst the homeless, and you set up some program to deliver free needles to all the homeless people who want it. Clearly, that may have some net positive benefit. But what is that benefit, right? I mean, the measurement of how much good the needle program did becomes really difficult to measure. And if you don't have measurements, then how do you decide what do you want to increase or decrease, or what changes do you want to make? In a capitalist business, it's really simple. The profits and kind of growth and all of that give you a lot of feedback on what's working and what's not working and what areas to focus on and not focus on, all of these things. In general, society benefits and everyone benefits. So the nonprofit world has these two problems. One is that you would basically be in business forever while you could do basically nothing good. And there's nothing that would take you out of that situation. The second is that the measurements are hard. So even if you have a great heart and you actually want to do a good job, the measurements are hard. So what I did at Dakshana is I inverted the problem. Like Munger says, invert, always invert. And the inversion that I did was that I was only going to look at activities where the feedback loops or the ability to tell what output came from the input was easy to do. So most of these kind of initiatives that you would embark on, the measurement is really difficult. I mean, let's take the example of the Gottesmans, who recently, she gave $1 billion to the Albert Einstein School of Medicine, and they've taken away, I mean, there's no tuition anymore for anyone in going to med school at the Albert Einstein School of Medicine. Clearly, that has positive impacts. But if someone is already, 100 million plus family going, some kid going to the Albert Einstein School of Medicine, them getting tuition free, the benefit of that to that family in terms of helping society versus another family which really needs that free tuition for the person to become a doctor is very different. The return on invested capital in those two situations is extremely different. And so I don't even know if there will be any measurements done of, what percent of that class needed that help and what percent didn't, and so on and so forth. Even though I love the idea, I think it's a great initiative. At Dakshana, what we did was, because of the inversion, I said, okay, education in general has a huge multiplier effect because, you basically you can transform, zeros into heroes. That has a huge impact. I grew up in India. I grew up with a lot of extreme poverty that I witnessed all around me. And I knew that there were millions and millions of people who were very smart and who would never get a chance at a decent education. My thinking was that if we can harness these high throughput brains and, provide them the tools so that that brain becomes very useful to society and to the family and community, then that's a very positive thing. And so what Dakshana did and what we've done for the last 18 years or so is that we had two ecosystems in India that made Dakshan extremely effective. In fact, I actually didn't want to set up my own operation. I didn't want to actually do a nonprofit. I just wanted to write checks. And I was disappointed 18 years ago when I looked because I was not able to find organizations where I thought the social return on invested capital was acceptable or high. In India, we have this kind of somewhat unique situation where we have these very elite Indian Institute of Technology, which has a number of campuses, which are from US standards almost free to attend. They're heavily subsidized by the government, but they're very difficult to get into. It's a strict meritocracy to get into the IIT. So it doesn't matter if your father went there or how rich you are or what money you donate to the IITs. There is only one way to get admitted into the IITs, which is you have to clear their entrance exam. And the entrance exam does not have essays or anything subjective. It is a pure kind of quantitative and, qualitative kind of objective test. It's probably the toughest test in the world. And there's about 1.3 million kids a year who try to get into the IITs every year. And there are 16,000 seats. So the admit rate is about like 1.3% or so. I think Princeton would have an admit rate of about 4 or 5%. And a lot of the Ivies are between like 4 to 8% and so on. Bill Gates says that if he was limited to recruit from only one school for Microsoft when he was running Microsoft, he would only recruit from the IITs. He would not recruit from MIT and he would not recruit from Stanford, and he would bypass all the US universities, he would only recruit from the IITs. And the reason he's saying that is, and I'll get to a little bit about what Dakshana does, but just wanted to explain kind of a little bit of how it works in the IIT. So you get ranked when you take this test from 1 million, number one, to 1.3 million. You get a rank. When you are rank one, they come and ask you which campus and which major do you want. By the time you get to rank approximately 95 out of 1.3 million, IIT Bombay Computer Science has closed. So if you get ranked 96, you cannot go to IIT Bombay Computer Science. Dakshana had a scholar, very poor kid, basically grew up in a slum in Hyderabad. Parents were like under $50 a month in monthly income. Sometimes they didn't even have food to eat, went to sleep hungry and so on. So this kid basically gets accepted by IIT with a rank of 63, which is the best rank we've ever produced at Dakshana in 18 years. And so he goes to IIT Bombay Computer Science. The IIT Bombay Computer Science class, that class has, the horsepower in that class has no parallel anywhere in the world. There is no classroom, there is no computer science classroom in the United States or anywhere else in the world with the brain power that the IIT Bombay Computer Science class has. Because you've got people who are ranked 90. Now, just to tell you about how hard that test is, if you score about 33% on that test, you will get a seat at IIT. You just have to score 33%. These kids who are in the top 96 have like something like 90+% score, 92% score on that test. So anyway, Ashok goes to IIT Bombay Computer Science. He has never seen a test in his life that he wasn't number one. It's never happened to him. In every class he was in at Dakshana or any place else, he was always number one. And the first test he had, the first computer science test in the first class he took, his rank was like 80 out of 90, whatever kids in the class. And he said, I got a score of like, 27 out of 100 on that test. I studied really hard for it. He said, I spent about a half an hour just looking at the paper. It never ever fucking happened to me that I am not in the top, 1 or top 5% or 10%. And he said there were kids in that class who had topped that test. They got 100 on it and they were goofing off the previous night. They weren't even studying. They were like playing around. So he went back from that test and he said, Ashok, find another gear. Whatever you've done in the past, you're not in Kansas anymore. He really busted his ass. I mean, he's a very competitive guy, really worked really hard. He graduated probably in the top 15% of his class. I told him when he was graduating, he grew up in a slum in Hyderabad, and the Microsoft campus was India's headquarters of Microsoft was like right there. You could see it every day. So for him, it was aspirational to go to work for Microsoft. And he had applied to Microsoft, he got a job. And I said, listen, why don't you send an email to hr@google.com and you just send them your resume. But in the email, I just want you to tell them your IITG rank of 63 and your GPA when you're graduating from IIT Bombay Computer Science. Within about 7 hours of him sending that email, Google set up Skype interviews with him. They never met him. 3 guys talked to him for about 20 minutes each. And he had a job offer from Google and he moved to Mountain View. And Ashok is now, I think, level 7. I think he makes over $1 million a year. And he's moved up quite a bit. He's got a large team that works for him and so on. So anyway, what Dakshana does is we identify extremely poor kids who've got very high horsepower. The IITs have a 1.3% admit rate. We've got about a 70% admit rate of our kids going to IIT. And then we've expanded it to med school and so on. And we take now about 1,000 kids a year, and about 700 or 800 of them end up at very good schools, and almost all of them go to some decent college. Currently Dakshana spends about $3 million a year, and we're just embarking on about 10 million of capex, and then we'll probably be able to take about 1,500 kids a year. We have our own campus now, 109 acres and such, and so that's what we do. And so the input-output ratio at Dakshana is very easy to measure. We know it costs us about $3,000 to basically support a kid for 1 or 2 years. And like in Ashok's case, the family used to make $50 a month. The family is now at like, 80,000 a month, and a transformation from $50 to 80,000 was $3,000. So that's kind of what we do.
Folks, can you just elaborate a little bit on what's done in that year for the kids to sort of make this transformation happen? And like $3,000 seems like you get a lot out of the $3,000.
Yeah. So basically we have 2 programs. One is a 2-year program, one is the 1-year program. And I'll just go over the 1-year program for simplicity. They drop a year after high school. So they finish 12th grade, they finish high school, they drop 1 year for prep for the IIT exam. We move them to our campus in Pune. So room, board, coaching, books, everything is covered. They don't pay for anything. It costs us approximately, you can say about $1,500 a year for the room and board and all of that for them, and another $1,500 for all the coaching. So we have very high-end faculty. We have some faculty members that in India make about $60,000, $70,000, $80,000 a year. I mean, it'd be equivalent to making about $500,000 in the US. So rich kids try to get into the Dakshana program because we have better coaching at Dakshana than the for-profit world does in India. We have a problem where we have to, have a lot of gates up, make sure that we're not getting, but we get a lot of offers from very wealthy parents offering us even $20,000, $30,000 a year to take their kid. And of course, we don't take any of the kids at any price. It's free or nothing. That's kind of how we do that.
I'll give you just a chance to brag for a second. The stats on the medical school program, I think, are perhaps even more impressive. Do you remember? I don't know if you remember what they are. You wrote about them in your annual report.
Yeah. I mean, there's a set of medical colleges, which is like the IITs. called the All India Institute of Medical Sciences, and they have a ridiculously lower acceptance rate. I mean, they got much fewer seats. So when I was in high school in India, there used to be only 36 seats for AIIMS, and there were like 50,000 kids applying for those 36 seats. It was just insane trying to get a seat. I mean, probably some of the very top end doctors in the US, Indian doctors, are AIIMS graduates. Some of these guys have gotten Nobel Prizes and so on. And so the admit rate at AIIMS in India is like 0.1%. And Dakshana's success rates in AIIMS is around, I mean, we don't actually try to get into AIIMS. We just have them take the test we just try to get them into med school. But the kids we take on, about 15% of them go to AIIMS, whereas on the national population, it's 0.1%. So it's an insanely hard. So actually, our numbers on the AIIMS side are even better.
Yeah, that's awesome. I'm going to let folks will come up to the computer and just ask a couple questions.
Hi, Mohnish. Thanks for doing this. I'm curious how the 3,000 per student has evolved as you guys have scaled. Did it used to be 5,000 a student, and as you've scaled, the price came down? And if your $3 million a year operating budget went up to $10 million a year, $20 million a year, could you still scale the business, not the business, the organization, and achieve similar success rates at similar costs?
Yeah, when we started, it was an outsourced model. So we didn't have our own campus. We basically just wrote checks. We identified the kids, and then we sent them to for-profit coaching locations and paid for everything, basically paid for the room and board and paid for the coaching and all that. And over time, we brought it completely in-house, vertically integrated. And in fact, now a lot of the faculty is our alums. So a lot of the kids who actually graduated through our program, went to IIT, et cetera, they've come back. And those guys are fantastic because they've gone through our program. So yeah, the cost used to be around 5,000. And of course, there's been inflation in the last 18 years. It used to be around 5,000 about 17, 18 years ago. It's come down to about 3,000. But if you consider the inflation in the last 18 years, it's probably come down even more because of, what money was then versus now. And we do have limits in terms of how far this can go. We think that we can get to spending about 7 or 8 million a year, and then we would max out because we would run out of IIT seats. We are already taking approximately 3-4% of the IIT seats, like 1 in 20, 1 in 25 kids on that campus is coming from Dakshana. I don't think we can ever get to more than 1 in 8. That's a lot, take 12% of the seats. Because you have to understand the rich kids, they've got a lot of resources and they're trying everything under the sun. And in fact, a lot of them start the coaching in 6th grade. So our coaching starts after 12th grade for 1 year. A lot of the rich kids are going through coaching for like 6 years, for example, to try to get in. So it's insane situation. You're starting a kid at 12, trying to get into IIT at 18. So yeah, so basically, I think once we get to about 7-8 million of spending, I think we run out of seats basically. And so we'll probably get to that in a few years. We're just adding capacity, which will take about 3 years with all the construction and all that. But basically it'll go to about 5 million a year in about 3 years. And then the next step from that would be to max it to about 8 million. So I would say in probably 6 years, 5-6 years, we'll be maxed out.
Thank you so much, Mohnish, and congrats on the successes so far. I would like to ask a two-part, kind of two related questions, but one, you talked about pursuing high risk, high reward investments in your charities. So maybe talk a little bit about some failures that you've learned some lessons from and what those lessons might be. And relatedly, now that you've found something that works so phenomenally, do you try to create a feedback loop where all your incremental and kind of charitable investments flow into compounding what you've already built and adjacencies related to it? Or are you planting other seeds to try to do something maybe perhaps in an entirely different domain?
Well, I'm a big believer in focus. So I think for us right now, our focus is to get to the 7 or 8 million and max out the model. Maybe we'll try to take it to 10, 12 million and see. I actually want to hit a brick wall and just see where that wall is. So we'll push as much as we can to see, what the limits of that wall is and where that ends up. If you think about it from a net worth point of view, I mean, I would say if Dakshana was spending something like 10 million a year, and if my net worth were, let's say, around 200 million, to be about like a 5% type annual number, if there were no outside donors. I mean, at those numbers, my net worth got in half because I got divorced a few years back. Thankfully, it was still over 50 after the divorce. So we could still keep it going, but we're not at 200 million yet. With some luck, maybe next year, we'll see. But yeah, I mean, I think that I always want to have feedback loops. I don't mind taking risk. When we started this model that is working very well, it wasn't expected to work. I mean, I was a guy in shorts in California doing something remote in India, and basically people took advantage of us. I mean, we paid these coaching companies to coach our kids. They sent third-rate faculty. They sometimes never sent anyone. They basically just took the money and nobody showed up. And so we had a lot of issues. So for example, the very first batch that we had, our success rate of getting kids into IIT was about 10%. Just 10% of the kids got in. It was the same quality of kids as we have today, but it was a 8-to-1, 7-to-1 differential in success. It was very clear to me that what we had given in terms of quality to the kids of coaching was pathetic. It was terrible. So I knew that, hey, this is just like any business. We just have to, block and tackle, just make tomorrow better than today. And, we fired some of the coaching places that screwed us. Fool me once, shame on you. Fool me twice, shame on me. So, we got rid of all the yo-yos who were, screwing with us. And the next year was around 20%, and I knew it could keep going higher. And we just kept working at it. And I want to find other models. I think we'll need to find some other models in a few years. I know that the return will go down. I don't think we'll ever find anything like this. I mean, we just lucked out and it's very extreme, whatever, but it won't be anything like this. But that's okay. It can be a much lower return and still be quite good.
Hey, Mohnish, thanks for doing this. So quick question. At the beginning, you mentioned some of the failures of charities at large. And I'm wondering, have you seen anything interesting in terms of people who are employing other methods to kind of fix some of those failings outside of what you're specifically doing?
Yeah, I'm really impressed with some of the charities I've run into since then. So for example, some of you might be familiar with Success Academy, which is Joel Greenblatt's initiative in New York City with all the charter schools and such. I think they've done a wonderful job. And in general, charter schools, if they run well, I think that's a US model, which is easier to get you guys' kind of arms around, is that because you're getting base level funding in terms of public dollars from the government, and then you're overlaying that with private funds, the return on those private funds is very high. So like, for example, Joel's case, the Success Academy, a lot of the teachers are Ivy League educated and a lot of the students are inner city minorities and so on. So it's kind of two worlds that do normally never meet. And they've done a great job. I mean, I think so. I think charter schools that are well run and such, I think can work well because of the public funding that is coming through. And we have a lot of waste of public funding in the public school system in most cases around the country. So that can be a good model. I found some very good models in India as well. Some are in education, sometimes some are kind of adjacencies. So yeah, I mean, if you look at it from the lens of, input, output, you'll find it very easy because that's what you guys do for a living, right? So when you look at the Gottesman program at Albert Einstein, and let's say you were going to compare it to Success Academy, I mean, I have nothing against the Gottesman, but I think, Joel's program to me has a higher return.
Hi, thanks for doing this. I just had a brief question. Has your philanthropy been exclusively focused on this education? And if not, have you invested in or donated to regions that have experienced natural disasters or anything with shorter term time horizons? The reason I ask is because I live in Asheville, which, as you may know, has recently been hit pretty hard by hurricanes. And I'm in charge of a team that's trying to allocate a couple $1 million to disaster recovery. And if so, I'm just wondering if there's any general lessons that you've observed from that. If you don't have any experience, that's totally okay.
Dakshana has done very little outside of its core model. I mean, I think one time I gave 10,000 to Joel to have lunch with him with a donation to Success Academy, and I had lunch with Buffett. That was a donation as well to the Glide Foundation. When there was a Turkey earthquake, we made some contribution because we've got investments in Turkey. So I didn't feel like we should just be taking without giving. But in general, I say no almost 99% of the time. And I don't look at other causes. I think it's really important in philanthropy to be focused. So I think in your Asheville situation, yeah, the important thing there would be to drill down to see what is the best way to help that community with those limited resources, and that's not an easy problem to get your arms around. So you can certainly limit yourself to Asheville, but you can still optimize within that. I think that because charity is so hard, I think all of you, my advice would be to stay very narrow, to say no a lot, to not sprinkle, all over the place. I don't think that would work very well.
Mohnish, you've been really generous with your time. Would you be open to, I know we have at least one or two kind of non-philanthropic questions that folks just as practitioners of investing would be curious on your thoughts. Is that all right?
Sure, no problem.
Hey, Mohnish, I know you don't really like talking about your existing stocks, so I'm not going to ask you about that. But, Buffett has been selling Bank of America and Apple, and the S&P's at I guess, I don't know what the percentile is, but it's a pretty high, PE ratio. And, even within that, it's being driven by sort of these massive sort of macro trends, AI, whatnot. I mean, I'm curious sort of your sort of macro view, just in terms of valuation, opportunity, availability. And then I would say also, the future for, small cap stock picking. I know sort of earlier in your career, you did, sort of more small cap. I mean, I know you do stuff in India, sort of curious your thoughts on sort of high level macro, and then just also what you think the future for sort of small cap stock picking in sort of the US domestic markets is. I mean, do you think that because of ETFs, people are, there's just less and less active management? I'm just sort of curious your thoughts on that.
Yeah, I really enjoyed a recent letter by David Einhorn where he was talking about how Buffett always says that he's not a market timer. He's never focused on market timing. And David made the point that he's the best market timer he knows, that there's no better market timer than Warren. He closed his partnership in 1969 and Charlie and everyone else took it on the chin, but Warren didn't. If you just track the history of what Warren's done, it turns out that he's usually had just impeccable, even like, for example, his Gen repurchase with stock, overvalued Berkshire stock and so on. He's been very smart about it. I mean, I think Berkshire probably, they're building their dry powder. He may have some views that things are a little frothy, but they may actually get a chance to put 100 billion or more to work on something. And he said, I think he made a comment that market dislocation will happen. He said he doesn't know whether it'll happen next year, but he thinks the odds in 10 years are high, for example. I mean, that's a comment he made. So that's, I think, how I think about that. From my point of view, I mean, I'm a stock picker, so I don't really particularly care about where the S&P is at because I'm not buying the S&P and I'm not buying the Magnificent Seven and so on. But I think that, yeah, there's always a world with 50,000 stocks and all these individual things going on to individual companies. There's always going to be exceptional opportunities. I think if someone is just willing to dig, even in the most frothy markets, there would be opportunities. And especially now we have kind of this barbell type market where, a lot of it is left behind and a few things are kind of raging on. I don't find a lot of things, but I find enough things to be invested. We don't have too many buckets. If I look at our billion or so under management, it's the most weird allocation we have. 70% or something is sitting in Turkey. Maybe another 20 or 25% is sitting in coal. So we're at 95% now. And then the 5% doesn't really matter, not really relevant. Within Turkey, basically the 70% is in 3 stocks. So that's the allocation we have right now. And I wouldn't want it any other way.
Thank you.
All right, last question.
How you doing? And thank you for taking the time. I just have a quick question. In the Dondo Investor, you had written that if you own a stock and after 2 or 3 years it's not working, it's probably time to move on. So I'm curious if you still feel that way broadly, and then more specifically, how you might think about something like a factor being out of fashion, which maybe explains why the stock is not working, even if the business is executing?
Well, I mean, I think that one of the things about the good news of the investing business is one can do really well even with a high error rate. So the best of us will be wrong 1 out of 3 times in what we think something company is going to do. Many of us will be wrong half the time or more than half the time. Stock could flatline, stock could decline, stock doesn't get to where we think it is, where it should be valued at. So there's a lot of reasons. Error rate being as high as it is, if you've invested in something and after 3 years it's still sitting where you invested or is lower than where you invested, I think there's a decent probability that your assessment was wrong. It's not 100% probability, but I think that you need to do a holistic analysis of what might be going on. It's possible that it's still undervalued. It's possible that market may take longer and so on. That's fine. But it's, I think, a decent possibility at that point that there may be some factors that you may not be understanding that is affecting intrinsic value.
Thank you so much for your time. I don't know what the social return will be on this hour that you spent, but there's a fair amount of capital in the room and sort of like minds, and hopefully, I think you've probably influenced some of the thinking, and these sort of ripples will be felt over time. But really appreciate it. Thank you.
Well, Scott, I just want to say that I have a lot of respect for you and what you do. And that's why when you cold approached me, it was a no-brainer for me to participate. And I really enjoyed the interaction. So thank you so much.
Great. I appreciate that.
All right.